We are talking about a lot of different gold mining and silver mining stocks, and we're talking about the trends in general that we've been seeing in the precious metals market. Now, first of all, let's start off with the overall market. Now, if you look over the last 5 days, it's kind of been a bloodbath. Over the last 5 days, down 10, almost 11%. If you look at the Dow, we're down over the last 5 days, almost 10%. So that was what? The QQQ, and that was the Dow. So the more volatile one and also the more conservative one. Now the SPY, I thought I had the SPY pulled up, but the SPY also went down a lot over the last 5 days. Actually, almost as much as the NASDAQ at 10.59%. But the NASDAQ QQQ takes the cake for basically being the most volatile one out there. And if we look at some of these gold mining ETFs, one thing you can say about gold is that over the last year, gold has done well in terms, 23%. But even over the last 5 days, like the VanEck Vectors Gold Miners ETF, this one right here over the last 5 days, it's dragging it down with the market. So these things, even though, yes, technically, we're looking at, let's say, long-term gold and silver do well, and we see a good push in the right direction. If gold's at 3,000 right now, and I've always been a fan myself, especially with these, with these tariffs and everything. We can get into all of that, and we will talk about that in this video. But if we're thinking about long-term with gold, just popped to 3,000. All right, perfect. As we're making this video live. So basically with gold, though, it's very liquid. You can trade it internationally, anywhere in the world pretty much. Take it to any country, and you find somebody who accepts gold, you can do a trade with them. I mean, it's one of those things where, as we see the price of gold trading right now at 3,000, somebody's probably going to be paying that if you want to get $3,000 cash, and you can do that in any currency. So that's the beauty of gold. But Bitcoin is also kind of coming up as well. So keep an eye on some of the cryptocurrencies, because a lot of people are, especially the younger generation, are really starting to like that stuff, and that stuff's just becoming more and more popular. Now, myself, I've always thought like having a gold-backed reserve cryptocurrency might be a good idea, but I'll just leave it at that. And, maybe that could be a business idea for somebody out there. Who knows? Maybe even myself. We'll see. But silver at $30 an ounce here. So silver and gold definitely doing well. Up 5.7%. Okay, now it's actually starting to go up a little bit, 7% in the last year. So, silver at trading intraday here. Last 5 days. And this is in the evening time, so 9:36, down 13.71%. But here's the thing about silver, right? And all these gold mining stocks, you're going to expect volatility whenever the market goes down. So you're seeing pretty much the same moves as the NASDAQ. I mean, this trades in the New York Stock Exchange ARCA. This, silver futures, we have GDX, which trades on the NYSE ARCA. That's where a lot of these ETFs trade on. But then we also have the individual gold mining stocks. Now, what I've said for a while is that if you want to place a leverage bet on gold, you're going to want to go for these gold mining stocks. And not just the gold mining stocks, but the silver mining stocks. So we can start off with Barrick Gold. Barrick Gold is one of those stocks that's currently at a $30 billion market cap, income of over $2 billion, and sales of $13 billion. Now, one thing you're going to notice as I go through these, keep an eye on the income. Keep an eye on the market cap. Keep an eye on the sales, especially the income. You're going to notice a consistent trend with these gold mining stocks, and for good reason. And if you look at some of these valuations, like the forward price to earnings ratio as well, you might notice some things. But especially on the income side, a lot of companies back in like 2020, 2021, we saw were not profitable. One thing you can say about most of these companies, and that's the point I'm trying to make, is that you will see about 95+% of the companies we discuss here are going to be profitable. So keep an eye on this income number. You're not going to see a negative sign in front of most of these. But even if you do see a negative sign, like in the case of B2G Gold Corp, this one has negative income of $629 million. So you can kind of deep dive that if you're looking to research this. I encourage you always for any of these stocks or ETFs to do your own research and look into this yourself, because ultimately it's up to you and your risk tolerance if you want to buy something like this. But the thing about this stock, and I've talked about this stock on the channel, they've had a very consistent dividend. In fact, over the last trailing 12 months, over 5%. So if you're looking to throw in some income with gold mining stocks, this one might be worth a small part of your portfolio. But it's up to you, obviously. And some of these stocks that we do talk about, you'll see that they do pay dividends. Maybe not large dividends, but they do pay some dividends. And BTG, I think, is one of the bigger ones in terms of the gold mining space. But could that be a trend going forward? If you have gold mining stocks that start to pay larger dividends because they can, because their free cash flow and their income's going up, What's that going to do to the stock price too when people want to get into these gold and silver mining stocks? If gold's trading at $5,000 an ounce, what would that do to the price of these, first of all? Like B2G trading at $2 to $3 a share, which it has been for a long time. But not just this one. A lot of these stocks we're talking about. We're currently at a $3.51 billion market cap. This is on the lower market cap side, so keep that in mind with BTG. But just another stock to keep in mind that pays a solid dividend as well. Now, this next one, if you'll notice, before we even discuss the name of the stock, you'll see it already has a 2.23% dividend yield. Over the last trailing 12 months, we're looking at 2.22. Pretty much the same thing. Newmont. Now, this is another one I've discussed. Now, this one is highly profitable. We have a cash cow. $3.34 billion. Now, this one is also a larger market cap company at $50 billion market cap. But Newmont Mining, I have to say, is a great company. I would honestly recommend Newmont in terms of a long-term dividend play. They've had to make some cuts and adjustments with their dividends. Part of that is just the cyclical nature of gold and silver in mining. Gold and silver mining and all of these operations benefit, obviously, when the price of gold and silver go up. So that's because they have a lot of fixed costs that don't have. So the more gold and silver go up, basically the rest is profit. They do have variable costs, obviously, when they're mining for gold. But the fixed costs, when you're thinking from an accounting perspective and like valuation and what the investors are looking at externally, when they see fixed costs, keep in mind their fixed costs can pretty much stay the same. So the more fixed costs they have, I would say that's better for a lot of these gold mining stocks if you're looking at valuations and when the price of gold is going up. So that is something to really consider here. What kind of management do they have, and can the management use, managerial accounting and all of these financial analysis, everything else that's going on within the company to ensure that they are, able to keep their fixed costs low and, whatever it is they need to do, basically, if you're a CEO executive within these companies. But $50 billion market cap, and that also allows them to pay a dividend. So, they've been profitable, $3.34 billion, $20 billion, and this almost $20 billion in sales. You have a forward price earnings ratio of 11. So a lot of these stocks, I would say, are looking pretty undervalued right now, including Newmont Mining. Royal Gold Corporation, $10 billion company, and this one's been on a tear recently from $130 up to $155 a share. If you look at this also, we do have a small dividend. So as the price of gold's been going up, what are you seeing? These dividends are starting to be paid out. Could these dividends keep going up as the price of gold keeps going up? And not just gold. Some of these gold companies also focus on silver. They also focus on copper. So there's a lot of things to consider here. But one of the main things to consider is that if you have let's just say a gold mining or silver mining stock pays a 5-cent dividend and they're benefiting from appreciating metals prices, what do they might want to do to reward shareholders in their company, not only with an increasing stock price, but if they have the cash and they're making all this money from the price of gold and silver going up, maybe they could reward shareholders from all their increased free cash flow by really just paying out more in dividends. I mean, that would be something to consider, and I think you might see that with Royal Gold, you might see that with Newmont, you might see that with BTG, even though we had that negative net income. But all the rest of these you're going to see on here have positive income, positive net income, and you really have to look at the financial statements on a deeper level. I mean, these are all the metrics, but they have a market cap of $10 billion, sales of under $1 billion in this case, so a much smaller company compared to Newmont Mining. Now, this one has a forward P of 20, price to earnings ratio currently of 30, so keep that in mind. We're a little bit higher on the valuation side, but this one also being a smaller market cap could have higher growth potential as well. So with that being said, that would be Royal Gold Corporation. Let's move on to Harmony Gold Mining. Now, I've kept an eye on this one for a while. This one actually used to trade back in the day. If you go back several years from now, go back to 2022 even, I think this would have been, if you go back to, oh boy, this is a while ago, $3 a share. So this was trading actually back at, $2 a share, under $1 a share. But this goes back, I guess, several years. October 7th, what year is this at this point? I think probably 2022 or something. You'd have to look at the longer-term chart. But as you can see, recently, it's been the opposite story. And, in the recent months and years, as you can see, 2025, 2024, 2023, 2022. Yeah, you go back there, you're seeing $2 a share. So, I mean, this one has really climbed the charts here, and it's done pretty well. So if we're looking at this longer-term chart, where could this go? I mean, this is where it's at right now. So just keep an eye on this one. The technicals, $8 billion, income of $580 million, so we have positive income. And this one also pays a dividend. So a 1.86. And I also have a cash flow channel if you guys are interested out there. I'll probably make a video on that as well over there, so that way you guys can see the different dividend stocks that I'm talking about here. So basically all these dividend stocks, these gold stocks are also dividend stocks. So not all of them, but a lot of them are that we're talking about here. So that's Harmony Gold Corporation. I encourage you to do research on all of these, obviously, like I said, if you're interested. Forward price to earnings ratio of 7 on this one. That's pretty low. That might indicate they have a lot of growth. Maybe that's why their share price has been doing so well over the last several months and over the last year, because investors are seeing something with this one, right? It seems as though the forward price to earnings ratio, the overall price to earnings ratio is 14, lower than the market, I would say, in terms of evaluation. So this one might have some room to grow. Now we have DRD Gold, and this one right here has been on a tear recently from $8 a share to $13 a share. And if we go back even further to 2023, you can see it got under $5 a share. Longer term chart coming down under, but yeah, basically that just takes you back, and you can look back at the historical price action. But as of right now, this is where we're at. So can we really entertain this and keep this momentum going at $13 a share? Now, if we're looking at the price to earnings, I mean, a lot of these valuations, like I said, you're seeing low valuations. Market cap of only $1 billion on this one, and $93 million positive in income, 2.61% dividend yield. I mean, you can't miss out on that. You can't ignore that, I should say. It's just exciting to think about. So I was actually surprised. I didn't even realize when I was going through these that most of these pay dividends, which is pretty cool in my opinion. So a 12.43 PE, forward price to earnings ratio of 10.27. Price to earnings to growth ratio very, very low. Typically a good sign that this company may be poised for growth. And so as you're seeing, investors are taking notice, and that's what's happening. Now I typed in, just best gold mining stocks of 2025, and I found these other three. Now we already discussed Harmony. DRD, I think we did discuss that one already as well. So it looks like we're on the right track here. AU, did we discuss that one? I don't think we did, actually. Let me pull up AU. And Anglo Gold Ashanti, I've heard of this one. Now this one right here, man, another dividend payer. I tell you, this is going to keep on happening, I think, with these gold mining stocks. You're seeing a similar pattern with all these. The valuations are low. They're paying dividends. They're all profitable. Once again, $16 billion market cap, sales of upwards of $6 billion or almost $6 billion. And what you're seeing here with those, so there's a couple more. You have New Gold, NGD. Did we discuss New Gold already? I'm not so sure. Here's New Gold. This one's been on, a tear. It's more of a penny stock here. No dividend on this one, but we do have positive net income. We have sales of almost $1 billion. We have a very low forward price to earnings ratio, $2.63 billion market cap. Another one to keep an eye on. And then we have AGI, Alamos Gold Corporation. Man, I tell you, you're seeing the same type of pattern. Now, this one has a bit of a higher forward price to earnings ratio, so the valuation is a bit rich. The growth on this one, PEG of over 1. You have a market cap of $10 billion, $284 million in positive net income, $1.35 billion. A very small dividend. But, this one has a bit of a higher valuation. It might be worth taking a stab at, though. Keep in mind, it has ran up a lot, so maybe this valuation would correct in the short term. Maybe it comes down and tests a certain level down here, perhaps. It's possible. So that would be for Alamos Gold Incorporated. And then you have Agnico Eagle Mines, AEM. And this one here has been on a tear. If you actually look at the price action on this one, this has done very, very well. $35 a share. And that was back in, what year was that? 2022 or 2023 maybe. 45, just going back even further. So this one hit, a low of $32 a share. Now we're at $100 a share. So I would say this one's done pretty damn well in terms of where this has gone, especially in the last several months. As you can see, kind of zooming in on this one here, and you can see where we have been trading this consistent upward trend line that we're seeing. And 11.62 on the PEG. That's a bit high, but, some of these metrics can be off for certain reasons. So, you have to really kind of deep dive some of these things. But in terms of the forward price to earnings and the price earnings on this one, there it is, 26 and 18.65 for the forward PE. Market cap of $50 billion in this case. We do have a small dividend of 1.48%. we have positive net income of $1.9 billion and sales of $8.29 billion. Now, I've discussed a lot of the dividend stocks. I've also discussed a lot of the ETFs. Keep in mind, there's all kinds of opportunities. It's not just index funds in the market. You can hedge your bets with a lot of these gold mining stocks. And honestly, even though we've seen a pretty good run, like if you compare the S&P 500 we're down in the last year for the NASDAQ, for example. If we look at the last year, these gains, we're down. All those gains are given up now, right? But if you look at the gains on gold, GDX, GDXJ, we are seeing some positive momentum here. So silver futures up 7%. So we're still positive on gold, silver, the overall price action. But now the market has turned bearish. And so what we're seeing here is that a divergence. And I wanted to make one more point because the tariffs are another thing to consider, obviously. And the U.S. imports a lot of products. And so one thing Peter Schiff has said for a long time, and Peter Schiff has had his criticisms, but if we actually start to see a lot more exporting of the U.S., we have to bring the jobs back because we're not going to be getting products overseas because of all the crazy tariffs and stuff. Keep in mind that could cause a lot of inflation. So that could be bullish for the price of gold as well. And that's kind of what I'm expecting. Now, I could be wrong here. I could be totally wrong. And, gold and silver are not everything. In terms of like what I'd rather invest in, I'd honestly rather invest in real estate, and I'd rather invest in like buying a second home or something, a third home. Or I'd rather invest, in something that produces income like a dividend stock. And, all these gold mining stocks pay dividends. On top of that, you have the basically leveraged aspect of the price of gold. So if inflation really does pick up here and the inflation reports get worse, you can really hedge your bets with these tariffs. And that's one of the things to really consider here. So I hope you guys enjoyed this video. And let me know what you guys think in the comments down below. God bless you all. And we will see you in the next one. Take care.